Hello, everybody. Welcome to the latest episode of Blokes with Beards Talking Business. This session is going to focus on financial record keeping, hence why I'm doing the intros, because this really is me just going to be sitting to one side whilst Alan and to some extent Mark as well get stuck into all your questions about how long you should be keeping stuff, what you should be doing with things, what the actual point of anything is. So now's the time. It's the usual ask us anything format. We've got a few pre-submitted questions, but this really doesn't work if you aren't asking questions. So say hello, give us a wave. It's always nice to know we're not talking into the void. Stick your questions in and we'll start answering them. As usual, we've got Alan. I've done all that, haven't I? Have I? I lost. I don't know. There it is. You've got Alan. Alan's the accountant. Mark's the lawyer. I'm the IFA. Mark, do you want to do your legal bit?
Yeah, I'll do that.
High energy, boys. High energy.
Come on, let's do it. Right. I'm going to share my screen now and do the disclaimer. This is the fun bit that I get to do every week. It's
high profile role, that very important.
It really is. I feel like you've given me a really important job here. So yeah,
if you weren't telling everybody that listening to us without getting advice specific to their circumstances was idiotic, then where would we be?
Well, quite. Yeah, exactly. Right, I think we've probably had enough for that, haven't we?
Yeah, so you can pause it and rewind it. Just
yeah,
don't go steaming in too quick if you're listening to this. But yeah. So we've got a pre-submitted that I think we'll get stuck into. Where now, if I was anything other than a terrible host, I'd have that sitting somewhere to read off. But it was from my good friend John Cox. So let me read that out for you. I think this probably is an Alan question.
I think Jonathan Ross is safe.
You're lucky. Well, I was going to say you're lucky you're in Scotland, but you'd knock me out if I came up there anyway. Right. Hang on. Here we go. Right. I'd be intrigued what processes or software you use to keep records safe and out of malicious hands, and what software you use, as Excel is starting to get a bit creaky for me now. Was that absolute slaughtering of that message clear enough?
Thank you. So if I'm understanding this correctly, was it John?
John, yeah.
Hi, John. You are. It sounds like you're keeping your financial records on Excel at the moment, which isn't particularly clever. A couple of issues in that is timing. The time it takes to process your expenses specifically, but your financial records in particular. Security, which is clearly an issue for you anyway, so that's something that we need to discuss. And generally just best practice probably wouldn't be to use a spreadsheet to keep certainly your accounting records. We find that you're best using a cloud system, depending on your business. At Acumenica, we only work with two systems. One is Xero, the other's Free Agent. Depending on your business, if you have a service business, so contractor, consultant, tradesman, that kind of thing, it's probably your best bet to use Free Agent. If you're a wee bit more detailed, or require a wee bit more detail, you're probably best to use Xero. However, that only takes care of the bookkeeping side of things. The important thing is what you do with that information prior to. So you've got a bit of paper, so it's an invoice or it's a receipt or it's a bank statement. How do you get that from being a bit of paper to being a meaningful piece of data in your system? The best place to start is something like Dext, D-E-X-T, which used to be called Receipt Bank. There's another one called HubDoc, and there's one called Auto Entry. Essentially, scan the pieces of paper in, and using your phone, just a snap, or using a scanner if you've got high volume, and that uploads, reads the information on those pieces of paper, converts it into data, and pushes it up to either free agent or Zero or what have you as a financial transaction. So that's secure because it has the, what do you call it? The I can't remember what you call it. The security protocols that banks use to keep your stuff safe. It's got the same security aspect on it, and it's extremely quick if you set it up properly, and that's basically what you want. And you didn't need to muck about with formula and what have you in Excel or Google Sheets or what have you. So that's a very quick and basic how-to, if you like.
That's a good little tip, that, Alan.
That's really good.
I did my expenses the other day, and literally it was a drawer full of receipts. It took all day to do them. Absolute horror show.
You're like Alan's perfect client, Chris. You know.
Did we not have a conversation a couple of weeks ago about your your tax return as well? Mm-hmm. Well, I mean,
I need to know an accountant.
Do you know any good accountants, Chris? That's the question, isn't it?
I know a couple of accountants, I'm not sure if they're any good.
So quick one, Alan, on the back of that. You mentioned sort of free agent and another system as well. Was it Zero? Was it? Yeah. So can businesses use these themselves? Are they quite intuitive, or would you recommend that you have to work with your accountant kind of for them to fill it in and keep on top of it?
Well, you got to remember your accountant isn't necessarily your bookkeeper, and it makes sense that if you're paid for an accountant or any advisor, it's best to make sure that you're using those advisors to the best of their ability. And you've got to ask yourself if processing bank transactions and receipts are the best of their ability. The good thing about free agent, and I'm on record as being a free agent acolyte. Acumenica is a platinum partner free agent. We love free agent. Free agent's got a lot of good things in it. One of which is it'll guess using, I believe, AI, but it might not be. It might be mice or something in the back of your computer that guesses it. But they'll guess what the transactions are, so they'll recognise, say an invoice comes in and it's from, this isn't exactly a genius, but they'll recognise an invoice that comes to BT as to be posted to telephone, for example. So it pre-guesses them, but it doesn't pre-post them. So you've still got to approve them, but it speeds up the process. What was the other part of your question? Sorry.
That was really, I was just wondering whether these systems are that so intuitive that
okay,
use them, or whether they need professional help to kind of get everything in order.
Got you. I mean, you've got the bottom end, whereas it's the input and information, and you've got the top end, which is being able to interpret and understand that information. People kind of make the mistake of assuming that your accounting system does everything, and it can do quite a lot, but you've still got to be able to understand it. I think some of the advertising on the TV and what have you would suggest that get rid of your accountant if you've got Zero or what have you. It simply isn't the case. So you've got to be able to understand your finances as much as anything else. So I mean, I'm not going to be a turkey vote for Christmas anyway. So I would say obviously that you still need an accountant. But it does help to get to reframe the relationship with your accountant. You get a kind of higher level of service, if you know what I mean. Yeah,
and I think my wife, I think it's free agent that my wife uses for her business.
Right.
And what's quite what I quite like about that is obviously once the data's input, you can see a snapshot of where you are in terms of finances as well, and it can sort of show you, operating profit and whatnot on your end, rather than having to call up your account and go, "What the hell's going on?"
Exactly. One, I don't know if it's unique, but it doesn't appear in every platform, is the tax timeline. So that tells you at a glance what your upcoming liabilities are for VAT, corporation tax, self-assessment, PAYE, etc. Just in a tile in the corner of your screen, which is very helpful.
Yeah. Yeah, and it's easy, when you've got metrics like that, it's easy to make sure you're keeping on top of things and not, nothing slipping through the net, or you're going to be faced with a crazy tax bill and you're not going to be prepared for it. And you mentioned, I think it was DEX, which was like a system for kind of getting your receipts from paper to electronic. What about something like, I know the Monzo bank app has got, for every transaction, you can take a picture of the receipt and attach it to the transaction. From your perspective, is that a good, or, I mean, then you can export it. Is that a good or a bad system to use?
It's hard for me to really give an opinion on that, because if all you're doing is attaching a receipt to it, that doesn't improve the information that you're getting if it's being exported into free agent or Xero or what have you. It's just an extra piece of paper. From a record keep point of view, which of course is what we're discussing at the moment, that does mean that you have the record attached to the transaction.
Yep.
You are using accrual accounting, then that's not really going to provide you with any help, because your accounting is based on the invoice rather than the payment of that invoice. So that could complicate things a wee bit. But if you're using cash accounting, which basically means that you calculate a profit based on when something has been paid or is being paid, then it does help, but it doesn't help me particularly, but it certainly helps in keeping a record of each transaction, that's for sure.
Yeah, and I think that's sort of what I was getting at in terms of getting things, marrying things up early on, and not just having a Chris Thompson drawer of, hard copy receipts to have to do at the end. And doing it bit by bit as you go, I suppose. Sorry, Chris, for dropping you in there. But
that actually speaks to quite a good point, is that if you keep on top of it, if you do your invoicing or your books or what have you, minimum monthly, but you want to really try and do it weekly at the minimum, or as you've kind of said, on an ongoing basis, then it makes the task far less daunting, and it kind of proves that you're a wee bit more organised than others, I suppose. I'm pointing no fingers, Chris. But like, again, sorry, I'm going to just shout out Free Agent once again. Free Agent's got an app on a phone app, so basically you can take a picture of your receipt on the app and it uploads it directly to Free Agent anyway, which is better for me than using Monzo, or I think there's another, somebody else, is it Revolut?
Starling, the other one, on Revolut.
Yeah.
Well, we've got a couple of comments, and I'll read this very important one out first from Stephen Cam. Is your paper calendar an essential bit of modern office kit? And I think it is essential, because whilst I don't actually refer to it or write anything in it, it's got pretty pictures of Newcastle in, and it warms my cold northern heart down here in Essex. I look out the windows at farmland. I can look at the Guildhall, which I think's got a Hard Rock Cafe down the bottom of it now.
And it gives you, obviously, you look at the calendar, you see what date it is, and you think, oh, it's time for me to go to the car, open the glove box, get all my receipts, put it in an envelope.
I've got a multiple envelope system, actually, Alan. It's very
excellent.
I like the pictures as well. My brother-in-law got me, I don't know whether you can see it because of this silly filter, but probably not.
No.
It's
I can't see the boobies. It looks like it's scenic. The filter's done something weird to it.
It's basically, it's for each month. It's a demotivation calendar. So for January we had this. You may like this. January was positivity. A journey begins with a single step, but so does falling off a cliff.
Right.
It's perseverance is February. Together we can do the work of one. Life. It is what it is.
All right, that'll do. Thank you.
That's enough.
Right,
that's
an interlude there for us from record keeping.
Whilst we're on the topic of free agent, because you use free agent, don't you, Alan? Is that right? Neil's popped a question in here. Interested to hear the distinction Alan made between detail levels of free agent and zero. I've only ever used free agent for my consultancy business since Making Tax Digital came along, and I always found it really easy and comprehensive. How easy is it to switch between platforms? And I guess the answer probably should be your experience both ways, Alan, sort of going onto free agent, away from free agent, onto and off zero, that sort of thing. Thanks for the question, Neil. It's a good one.
Neil, I think Neil's a client of mine, although it's not exactly an unusual name, so it might not be the same Neil. We're partners with free agent because our particular client base is perfect for free agent. It's not really a case of the size that you become when you want to change to zero. It's more about the kind of business you are. Zero lends itself, although it works well enough with contractors and consultancies and so forth as well. Zero lends itself to businesses that carry stock, for example. You know, if you buy things to sell things, or if you are a retailer and what have you, free agent doesn't really work with that. That having been said, there's sometimes that you would decide to move from free agent to zero for a multitude of reasons, and it's the movement, the process of change is straightforward enough. But it depends. Actually, I had a conversation with a guy about this recently. It depends how much information you want to transfer over. We would normally say, right, find a convenient date to be your cut-off. So that would be, generally speaking, it would be your year end. So you would stop using system one on the, let's say, 31st December, and then on the 1st of January you would move over. But the key is obviously to have everything up to date and ready before you do is get yourself up to date. So in terms of how easy it is, it's easy if you've got the information to hand. If you've not got the information to hand, it's a disaster, really. So it's like everything else. Be prepared first. And Neil, if it is Neil that's my client, I genuinely don't see any advantage in you moving to zero. Stick to free agent, mate.
There you go.
One other thing that just when I remember, if you pay wages and you pay people weekly rather than monthly, then free agent doesn't work, or at least the payroll module doesn't work. You can only process payroll with free agent on a monthly basis. So if you want to pay people weekly, you either have to use a system like Zero, which will process wages weekly, or you need to have another system that you use alongside free agent, like a standalone payroll system. But for me, I would recommend paying monthly, basically.
Nice.
It's easier, isn't it?
Keep it simple, yeah.
Yeah.
Very good. So it looks like at the minute we've got so many questions coming in. I think the platform's crashed, which makes it look like nothing's coming in. But don't let that put you off. If you've got a question, get it in. Whilst we're just waiting for something to come in, Alan, are there any things that you see people, apart from being organised, just getting completely wrong that ends up being a mess to sort out? Because I imagine record keeping is one of those things that there's a lot of things you can do to make your life easier.
Aye. Right, this might be a wee bit kind of technical as well, so forgive me, but this is a big problem that we find. We have, I mentioned accrual earlier, so basically using accrual accounting, you have a transaction. The transaction is when the invoice is raised, shall we say, if we can simplify it by using invoice. So that's a transaction, and then when the payment gets made, you match that payment to that invoice. Now, a big mistake that a lot of people will make is they'll raise the invoice, and then the payment will come in, and then they'll mark that as income as well. So rather than matching it to the sales invoice, they'll mark it as income. So the sales invoice is included in sales, and the transaction, the payment is included in sales. So you've effectively doubled your revenue for that particular transaction. That happens an awful lot. It also happens on the other side as well. So when you get an invoice in, you'll mark it as purchases, cost of sales or what have you. And then once you go ahead and pay it, you also mark that transaction as cost of sales. So that doubles your cost of sales. So it throws everything out. And if you don't have your accountant looking at things weekly, monthly, or regularly, not perhaps realise that, you look at your thing and you go, oh, hang on, I've done 50 grand of revenue this month, when maybe it should only be, because you've misposted a couple of things, it should only be 40. Make a decision based on that 50, then you get 3 months down the line, you realise you've made a mistake, you've got an extra couple of grand of VAT and what have you to pay. So you've obviously got to be careful about that.
So how would you go about on those examples? Is there, and it's probably not an easy solution, but are there any tips as how you might avoid that situation occurring?
Take the time to understand what you're doing, I would say, probably is the simple thing. And whether that be spending a bit of time with your accountant, they'll show you how to process the transactions, or whether it is digging into the help system pardon me, in your particular software package, application, platform, whatever you want to call it, or whether you want to speak to other users just to understand it. There's a lot of user groups on Facebook and what have you for particular products. So these are the kind of things that you want to do. Because remember, it's easier to post it correctly than it is to find error and unpick it, sort of thing. You can take ages just trying to find out what the problem is a lot of the time. So, again, it sounds a bit facile to say this, but it's prepare first is the honest thing.
Yeah, and it goes back to what we kind of always say with these things is, if you're unsure, get in an expert early on to give you a hand, because it normally pays dividends to do that. Because unpicking something typically takes more time and costs more money in the long run.
Another issue that just sprung to mind there. I mentioned about attaching transactions or attaching invoices, for example, to bank transactions. So you mentioned bonds and what have you. A lot of people make the mistake, especially VAT register. The record keeping rules for if you're VAT registered vary slightly from if you're not VAT registered. If you're not VAT registered, you basically, if we're talking about the expenses side, the onus is on you to be able to prove that an expense was incurred, right? If you are VAT registered, the onus is a wee bit more because you have to prove that there was VAT on it. Generally speaking, that would mean a VAT invoice or receipt is attached to the transaction. A lot of people will make the mistake they're VAT registered and they'll just look at their bank statements and just explain the transactions as something with VAT on it, and then that's it done, thinking that line on your bank statement proves that there's VAT on it. It doesn't. You must have a VAT invoice or a VAT receipt against that. That's a wee mistake that people make that can be easily avoided.
If you don't have those receipts, what's the potential implication of that?
Well, the first implication is that There's only implications if HMRC do a VAT inquiry, a VAT inspection. Right. So the first thing that they'll do is, if they're doing a VAT inspection, is they'll look to see all the input tax, or the tax on expenses and costs has been incurred, right? So they would look at these invoices, these lists of transactions, say, right, can we see the VAT return, VAT receipts, this, for this, that, and the next thing. If you say, oh, we've not got them, they'll say, well, the VAT that you've claimed on these transactions must be unclaimed, if you like. So we're looking for they prepare an assessment based on that, and they would ask for basically that's for the VAT that you'd reclaimed back. Yeah. And on top of that, penalties and interest, up to 100% of the tax.
Right, gosh, okay. So nobody wants that, really. I think it's a story.
So we had an issue. It's funny. Again, it depends on the how good the VAT inspectors are as well. If I'm being honest, because sometimes they'll miss things that are blatant. We had two examples. We had a couple of VAT inquiries running around about the same time. One of our clients bought a van, or a pickup or something, claimed the VAT on it, possibly correctly because there was VAT paid on it, but the document that he used as the transaction proof, if you like, was an order confirmation from the garage rather than an invoice. It wasn't a VAT invoice, it didn't have a VAT number on it. So the inspector says, well, we want the VAT back on that. Rightly, I suppose based on the scenario we were in. But fortunately, the client was able to go back to the garage to get an actual invoice, present it to the VAT man, and the VAT man says, well, that's okay. At the same time, we had a client who had a load of backdated invoices. So if you're VAT registered and you can reclaim, I think it's up to 5 years or something, pre-registration expenses for kit that you still own, right? So if you've bought a van in let's say within 5 years, then you can reclaim the VAT on your first VAT return. But that's only for goods. If it's for services, then you can't, because obviously you've incurred those services and used those services, so it's still there at the VAT registration. We had a client who had incurred lots of expenses, pre-trading expenses, essentially, consultancy, R&D work and what have you, and it amounted to a hill of beans. Like, there was about 50 grand worth of expenses, so about 10 grand in VAT. Submitted the VAT return. There was a significant repayment due. If there's a repayment due in your first VAT return, projects, rightly so, would trigger a look by HMRC. HMRC looked at these expenses that should never have been claimed. We only claimed them on the basis that we thought they were expenses, that they were goods, but turned out to be services, and passed it. And they looked at them, passed it. But that was going back to the questioning the competence of the VAT inspector. So, I should have picked up on that bit, didn't he?
We edited that bit out then, yeah.
That was about a cul-de-sac stroke rabbit hole I was going down there. I don't know how I'm going to get out of this one.
There's obviously a load of reasons why, there's things you want to avoid happening from not being on top of this stuff. But in terms of advantages of being on top of things, is there proactively ways that you can reduce your overall tax liability, for example, by having good record keeping?
Well, I mean, good record keeping promotes good accounting, which promotes good tax planning, which promotes lower tax returns. I suppose the one thing that springs immediately to mind is we discussed keeping on top of your VAT, keeping on top of your record keeping. If you keep on top of it, then you're not going to forget any expenses that you've incurred or miss any expenses, or you're less likely to. So I suppose that would be one way of ensuring that you're claiming all the expenses that you should. Another, I guess, important aspect of that is if you get your record keeping up to date, then that keeps your accounting up to date. Then you can make informed decisions in terms of tax planning, which should theoretically reduce your tax liability. Although it's not a direct consequence of keeping the VAT records, it's you're keeping good records. It's a couple of steps away, but it is an important thing, you know.
And I suppose if you've got just an extension of that point, but if you've got big expenses that you haven't documented properly, and then it comes to instructing your accountant to prepare your accounts and submit them. Let's say, for example, I was your client and I had a big expense which I didn't have any real documentation for, but I said, Alan, I need you to include this in the accounts. Is that putting you in a difficult position then? And what happens if you then submit accounts to HMRC and the documents aren't up to scratch because they haven't kept all the records they need?
That's a great question, Mark. Thank you. It doesn't necessarily put me in a difficult position or put your accountant in a difficult position. Although I've been in the game long enough to know whether, if somebody asks me that question, whether it's a genuine request or it's somebody at it, as we say up here. If there's any concern, I would look to have it documented that the client has said this, that, the next thing. So in his head rather than my head. But ultimately, if I see a client that's doing this, then I'm not going to put my professional good standing on the line just so that somebody can save a few quid in tax. If it feels to me that it doesn't sit correctly and they're not able to produce the goods, then we'll withdraw from acting. Really, that's as simple as that. We can't. There's too many, as you know, Mark. There's too many legislative hurdles for you to kind of turn a blind eye now. You know what I mean? We've got to report anti-money laundering or no anti-money laundering, any suspect transactions. That would be one. So we would get right out of that one if we could.
Well, exactly. And I mean, it might not be that the client is being tricky or trying to be tricky. It's that they were just genuinely crap at keeping the records. And so they're faced with a situation now where they've got a big expense that they want to include in the accounts, and they probably can't at that point, can they? Because as your accountant, you'd say, I'm not sure. HMRC are probably going to get the backup about this if we don't have the right documents.
If we're comfortable that the transaction or the expense happened, that the transaction happened, then we would ask the client to document that, and then if we deemed it appropriate, we would then put it into the accounts. We would though really want the client to actually spend a wee bit more time and try and get an external document, some sort of external proof, rather than just submit it on his say-so. But ultimately, as I say, I've been in this game, perhaps different for other people, but as you probably figured, I'm a wee bit cynical, and I can tell if somebody's taking the mickey.
You're not cynical, are you?
I know, some people say that. So I would be, it was a judgment call. Maybe the judgment might be different for different people, but for me, the judgment call would be that if the client can't document it from an external, I'll ask them to document it internally, I guess. If I didn't sit comfortably, I wouldn't put it in the tax return. And if the client insisted on it going in the tax return, then I would say, well, you need to get somebody else to do it. I'm not doing it. So you can't. Long and short is, you can't claim an expense that has no appropriate document, but can still be proven to have happened.
Yeah.
That would be different. Sorry, that would be different for VAT. That would be for your tax return. If it was VAT, forget it. Without the VAT number on a VAT invoice, you can't claim it. I suppose that's a wee bit more straightforward. You know?
There was an interesting case I dealt with years ago, and I won't mention any names, obviously, but an accountant was instructed to submit a VAT return without substantiating documents, and did it. And HMRC kicked up a real stink about this. The client had promised them that they were going to send them the VAT, the documentation, and just never did. And then when the HMRC started sniffing around and trying to reclaim money, the client just said, "Well, you said you were going to sort it. I didn't have these documents." So it was a real mess. So just when we were talking about that, then it triggered an old memory of that case, which again, in the end, we settled it, but it was a pain.
Depends how old that was that pre AMLR and stuff?
I'm trying to think how long ago it would have been. Maybe about 8 years ago.
So it might have been. It would have been pre the kind of regime we're under now, so it would be different.
Yeah.
But certainly now that would be a reportable thing, and the accountant would find himself in a bit of difficulty, shall we say.
Yes, hot water. Yeah. Well, so get your documents together.
Well, on the topic of this, we've covered quite a bit on just being in order, being in shape, and being on top of things. I think it would be remiss, it's a big word for me, of us not to cover off the legal implications of getting stuff wrong, because there are certain things that I would imagine not everyone's aware of, like how long you've actually got to keep a hold of certain documentation. Who wants to have a first crack at that one?
For the financial side of things, for tax and VAT, you're going to have to keep them for, it's a minimum of 6 years, but that actually can, depending on your financial year end and so forth, that can really work out as 8 years. But it's round about that kind of number. It doesn't have to be paper. A digital document is recognised as acceptable. So if you're uploading to Free Agent or Xero or other platforms are available, if you're uploading to those things, then the actual paper can be destroyed. You don't need to keep the paper as long as you've got a digital copy of it. Although I do know a lot of people then don't really trust digital documents just yet, and so they're still keeping the paper.
And what so 6 years, what is it that they have to keep? Is it just the accounts themselves, or is it all the supporting documentation, receipts, etc.?
All the receipts and stuff, right?
Yeah. And it can trip people up a little bit, this, because I sometimes I work with clients that do document retention schedules or policies for their businesses, and under the Companies Act, which deals with limited companies, etc., you only need to keep your accounting records for 3 years from the date they were made for private companies, and 6 years only for public companies. So sometimes people get tripped up on that because the tax regime that HMRC set is slightly different to, for instance, the Companies Act regime for limited companies.
Correct. A bit like what we discussed a couple of weeks ago about the whether you're an employer or an employee for tax purposes or for employment purposes. It's different rules. But obviously the trick is to take the most onerous and follow that. So if it's I can see how it would trip people up.
And I think that's why it's helpful. Again, I work with clients to do this, but it's helpful if you've got a business to set out a data retention schedule and list all the different types of documents that you'll have. And then, for instance, a retention period. So the type of data might be accounting records, then the retention period, the reason why, so you know exactly why you're doing it. So you'll refer to whatever Companies Act or business needs or whatever it is. And then you can add, a little comment section or something in your schedule to say, where we store it, what we do to archive and so on. You can do that for accounting records, employee records, and contracts as well, because for a different reason, I always advise clients to keep their contracts usually for at least 6 years, because that's the limitation period typically for when someone can bring a claim if something's gone wrong. So, and again, you've got to have in mind, not necessarily with just financial records, because they don't tend to trigger it as much, but with records generally, GDPR, making sure that if you're keeping any personal data, that you're not keeping it for too long. So it's a balancing act between making sure you're keeping certain records for long enough, but not keeping them too long that you're in breach of GDPR.
Can I just ask a quick question then, Mark? You mentioned employment records and what have you. How long is it prudent to hang on to those?
Well, it really depends. Again, it's about it's a balancing act between what GDPR basically says is that you need to have procedures where you keep documents for a period which isn't too long. Effectively, that's not the wording they use. But so it's about making sure that you keep them long enough, and that your policy documents that. So I can't really say. I mean, it depends on each business, I suppose.
Say you had a client. I think I touched on this with Chris. At the moment, I've got a client who had to. It was actually before we came on air. Actually, who had to basically sack his bookkeeper because he or she was drinking on the job, sort of thing.
Okay.
Right. So it was a difficult one, and it was ugly, but it is what it is. The concern obviously is, although our feeling is that the process was gone through properly, in terms of the dismissal, and there was a severance agreement and so on. The question is, how far into the future would this particular person be able to raise a claim, say, or some sort of action against them? So how long would we need to keep, or would the client need to keep those records, and to be able to defend a claim? So basically, is there a statute of limitations on that kind of thing? Although I know that's an Americanism, but you know what I mean.
Yeah, no, I mean we do use limitation is a word we use here in terms of limitation periods. We call it in terms of when the limit on which someone can bring a claim. So that does vary for different types of claims. So I mentioned before, contract is typically 6 years from the date that someone breaches a contract. When it comes to employment claims, and this is a big generalization, but usually you will only have 3 months to bring it to a tribunal from the date of the sort of action you're complaining of, typically. And again, that's generalization because there's different nuances, but it's really quick for employment. It's a lot quicker than people realize. The exception there is if you're claiming for instance, like unpaid wages or something purely contractual, like for a wrongful dismissal, you're basically saying you didn't pay me enough notice pay. And for that, you could still bring a claim for up to 6 years in the county court, for instance. So there's two separate avenues for anything which is sort of employment rights. In the Employment Rights Act, you've got the tribunal. That's unfair dismissal and discrimination and whatnot. And then for pure contractual claims, that's 6 years, and you can bring that in the county court and the tribunal. So I don't know whether that makes it any clearer for you. So you said in this case they'd reached the settlement agreement, had they, and everything had been signed off?
Aye.
Well, then in that case, if they've signed and they've got an advisor to give them advice and they've signed to waive any rights, then normally that will cover that off. As long as you've got a really clear settlement agreement that says, in return for payment of X or whatever it is that they agree on, we will not bring any claims, and they've got an advisor to sign it off. Normally that's enforceable. So that should be an end to it, all being well.
Okay, good enough. Thank you.
Well, gentlemen, we're at 44 minutes, so I think that wraps up the record-keeping edition.
That'll do us.
Yeah, very good. We're on course to be back next week, aren't we?
Yeah, I believe so.
Lovely, lovely. We shall announce we're liking the themes, aren't we?
I think so, aye.
Yeah, we'll have a theme for next week. We'll announce that towards the end of this week, start of next week, and if anyone wants to suggest one, feel free to send a message over. Other than that, arrivederci.
Adios.
Cheers, guys.